Well, it's flat for the markets today, and we'll take that with both hands. But let's get an expert now to tell us what to expect from here on. Nick Parsons, Head of Research for UK and Europe at National Australia Bank, joins in. Nick, hi, good morning. The Sensex has fallen almost 1,000 points over the past 2 days. Is India losing its sheen amongst global investors? And if yes, why?
Well, I think we can't divorce what's been happening very recently in India from a broader move in emerging market equities. Aside from China, let's put China to one side for a moment, but if you look at the whole EM universe, the MSCI index, that's fallen for 8 consecutive days. And it's not, we have to go back, I think, to August of last year to find the last time we had 8 consecutive declines. So there does seem to be a little bit of a move away from EM more generally. I think it's tied in with an increase in volatility and a rise in global bond yields. There are perhaps some India-specific worries, but a lot of what we can see appears to be stories made up to fit the price action rather than stories actually explaining it. So in that sense, we wouldn't be too concerned with the view that India somehow is about to significantly underperform.
Well, I'll come back to that issue again. Morning, Nick. But let me go to China. You started off with the China argument. Is it that some of the investors are selling India to buy China?
It's not a noticeable one from India to China, but there does seem to be a lot of talk of US money going into it, which I find quite unusual, and I find quite surprising given the scale of the gains that we've already seen. As of Monday this week, China broke the 50% increase level for the year to date. And whilst there may be some momentum-based investors, some model-type funds who are simply chasing a market because it happens to be going up, I wouldn't have thought the fundamental argument for chasing China is particularly robust at these levels. So I think we're seeing a bit of rotation, a bit of momentum-based investing, but certainly I would be very hard-pressed to make the case for significant outperformance of China relative to India.
Okay, this anti-EM trade that you just spoke about, do you see it continuing or is it at an end?
I don't think it's at an end just yet, because I think in part that's linked to higher volatility and higher yields in global bonds. There is an increase in global bond yields. German 10-year yields have gone through 80 basis points for the first time this year. France is now up through 100. Even the US has added to Tuesday's gains in yield, that is, with a further 3 or 4 basis point increase. And that is just, I think, putting investors off, or at least making them wary of the potential for a bit of a spike in volatility and an argument that says equity markets generally might just be in for a pause. Perhaps one statistic I could throw at you, at your viewers, is to say that if we look over the last 20 years, and I'm going to talk here about the Dow Jones index, but if we, in the United States, but if we take that broader span of time, over the last 20 years, the month of June has historically been the second worst month of the year. And if we look over the last 10 years, 8 of the last 10 Junes have seen a decline.
All right, we'll take that impact of June, but can you just give us a little more perspective about this yield rally that we saw even yesterday, both in the US and in Germany? Why are yields rallying so sharply all over the world, and do you see that continuing for some time? How long?
Well, globally, there's a perception that the process of deflation is not just at an end, but is actually being reversed. In the Eurozone, which had the biggest policy response, we've seen inflation move from minus 0.6% at its low point already to plus 0.3%, and we've seen ECB President Draghi actually pretty confident in his latest press conference that we'll be up at 1.5% in 16 and then 1.8% in 2017. So unless we were to see a further dramatic decline in oil prices, base effect effects alone seem to ensure that inflation is going to pick up. And with the pickup in inflation, so too I think we're going to see bond yields continue to rise.
Okay, so now coming back to the Indian markets, since March 3rd, the Nifty has fallen almost 1,000 points. That's at least 10% or more than that today. When do you think India, or for that matter, the emerging markets, will get attractive again in valuation terms?
I think for valuations to become compelling, we would probably need to see a more general sell-off in EM. And I think at the moment that is not yet there. So it's not compelling. I think we're probably going to see a drift off and an extension of the recent declines. But I don't think it's going to develop as yet into a rout unless we were to see more substantial declines in equity markets globally. For the moment, it seems confined to the EM universe. And I think confined and contained would be the words I would use to sum it up. But no particular reasons to disfavour or to dislike India any more than anywhere else.
At least on that's a positive thing to hear. Thank you very much, Nick Parsons, for joining us. Okay, so it is more like an EM story. No particular reason to disfavour
Yes.
India. That's what Nick is saying. But then he thinks that yields can continue to rise.